Mr. Rohit Srivastava, founder and market strategist at indiacharts.com. Sir, thank you for joining us here on First Take. Always a pleasure seeing you. Good recovery for the markets in the last 3-4 sessions. We are back at 22,000. Are we, breaking out, and is the record high the next level to track, sir?
So are we really out of the woods? That is the big question on the table. We've seen the market touch 22,124 in the month of January. In February, post-budget, there was a second attempt to get past that. We made a high of 22,127 almost, around 2-3 points higher, and then it sold off from there intraday itself. And now we are, I believe, making a third attempt to get to that level. If you ask me, I don't think we will seriously get past that. Either we really touch it. Even if we do manage to close above it for a day, I would still think that this is just like an extension of an ongoing distribution phase in the market. Because when we actually look at the broad participation over the last 2 months, it is reducing, and this rally is getting narrower and narrower. Mainly being driven, initially it was PSUs, now it is like only PSU banks. So as the rally gets narrower, driven by only a few stocks or sectors on a day-to-day basis, we do think it gets to an extreme where it still needs to, give back and, reach a point where it's more sustainable. So I think this is like a distribution pattern. Maybe we'll end up with a triple top near 22, 130 or so. That's what we are going to be watching out for. So not really getting too enthused by the bounce back that we've seen. But it does give us some very short-term momentum, for a day or two.
All right, and what's your opinion on the broader markets? Because the mid-cap and the small-cap indices, at least since October, we have seen one-day shakeout in both indices of about 3 to 4%. But the recovery has been equally strong in the past months. This time around, they have recovered, in fact, but the pace of recovery has been slower. So have things changed for the broader market, sir?
Yeah, so that is sort of why I said that it's a distribution. So if we actually look back, the first sector to be weak was, of course, banking. That's the obvious one. Next, we have seen this month we have seen small caps and mid caps weaken and not regaining the strength that they had previously. You are also seeing that to some extent, if not in PSU banks, I think PSU stocks across the board, there have been some very deep cuts in some of them and will probably not go back to the highs. So accordingly, this is like one sector at a time, couple of stocks at a time that are rolling off in terms of participating on the upside. And I think it's just the last man standing that is going on, which is why you just can't take a bet across the board anymore. It's become very, very selective. But that is by definition, dangerous, because if you have to be so selective, then you don't know where you're going to be hit. How do you really trade a low probability market?
Morning, sir. I'll drive your attention to something that has been in the news, the PSU stocks. Now, they have had some correction after a big rally for the last 1 year. And then after the correction, last few days saw them rise again. But when I look today, there is a slight downturn in some of them again. So what is happening? And specifically some of the popular ones like LIC, which is again down, has been down almost 8% in the last 5 days, ONGC, ERCON, MMTC, the popular ones, they are still in the negative. So what is happening in the PSU space? Is the cash out going to carry on for some more time?
So it happens slowly and then, all at once. That is how markets always are. We have seen huge volume in this space, probably all-time high volume in terms of number of shares traded. We call that a buying climax, where everybody gets involved. The cooling off from a buying climax can take, up to at least 2 months before you can get another move to the upside. So you have to give it that much time in terms of consolidation or correction, whatever the case may be. So it requires patience. I don't think it's a time to chase. The chasing part is done. Now it's a time to really wait and let things consolidate and not try to chase these moves.
All right, sir, there are also reports that SEBI is asking IPO-bound companies to remove selling shareholders, including private equity and venture capital firms from the decision-making process of the pricing of the IPO. What do you think is the rationale behind this move?
Well, it's interesting because you've seen a couple of new age companies in the past get listed at very, very high valuations. Many times that's an exit game, and sometimes you can actually play the valuation game by having 1% of the shares exchanged off the market at a very, very high price, which is what investment banking does, and then we say this is the valuation of the company. That's something that SEBI is trying to get out of the way, and I think that's a good move if you think of it from a retail investor's perspective. So, the world goes in a full circle. You have to go back 20, 30 years to understand where all of this comes from. We used to be, I grew up at a time when there was something known as the CCI, the Comptroller of Capital Issues, which used to decide the price at which an IPO could be done. So even the company could not decide what would be the IPO price. It was a decision made by the authority. You could, of course, suggest your price, but finally the authority would say whether it's okay or not. And if you suggested a higher price, they had their own formula above which you could not really price it. So they had a cap. So this is what the world goes to if you start overpricing yourself. We gave freedom, I think, after 91 reforms. We said, okay, you're free to price your public offer, and that has led us to a point where the prices are getting astronomical, and people are being made to believe that company even at a 50 times book is worthy of investing in, which is what I think SEBI is not trying to get a hang of. So that's a good thing.
Right. Thank you, sir. Thank you for joining us here on News 9. Always great insights from you.
Thank you.